All right, hello everybody. Today, the stock market jobber, which is me, wants to talk about Bollinger Bands because Bollinger Bands are really effective, and my recommendation is you at least give them a try. Use them for a while, try to get some nuances in. They're one of my favorite momentum indicators. Now, let's talk about what is momentum. Momentum is how far something has moved from time point A to time point B. The vast majority of the time, a security is within its typical or historical trading range. The vast majority of the time. If it gets above that because it's aggressively bought, we call that overbought. If it gets below that, we call that oversold. That happens if investors are just really beating it down. Now, why are overbought and oversold important? Because overbought attracts sellers into the market because they're going to be expecting a reversion to the mean, and oversold is going to attract buyers into the market because they're going to be expecting a reversion to the mean. Now, the upper Bollinger Band is 2 standard deviations above the 20-day moving average. The lower Bollinger Band is 2 standard deviations below the 20-day moving average. Now, notice up here we see days, okay? This is a chart where every one of these candlesticks is days. So we're going to talk a little bit about the fractal nature of technical analysis. Now, notice here we're getting a move lower. This wasn't really a great buy signal. Actually, it could have been. I think you probably had a 5 or 10% in there. So we get outside of the Bollinger Band. Well, guess what? Bollinger Bands are standard deviations. 95% of trading, well, at least this is what the statisticians tell me. I guess I'll have to trust them. 95% of trading should be within 2 standard deviations of the mean. Nowadays, there's all these computerized algorithm trading things that are based on statistics. So if we get above or below these thresholds, it's going to attract the attention of them. So here we go into this downtrend. We go from 10 all the way down to 7, so 30% loss. And we got outside of the Bollinger Band. What happened? The sell-off ended, at least for this probably 2 weeks. Okay, outside of the Bollinger Band was more than 2 standard deviations away from the mean. That brought buyers into the market. We move here, we move ahead, we get down here. Now this was a good buy signal. Okay, one of the keys to Bollinger Bands is to not just act when they are exceeded. I like to act when they are reverted back into, because something could be outside of its Bollinger Band for a while. Things could be overbought or oversold for longer than you think. It's a good idea, and this is what I like to teach at Stock Market Jobber, is to wait for the reversion to start and then jump in. So in this case, you would have gotten in here after we closed back within the Bollinger Band. But again, we're more than 2 standard deviations below the moving average, or the 20-day moving average. That's going to draw buyers into the market because they're going to be expecting a reversion to the mean, which when it's oversold, that means going higher. Here we have the Bollinger Bands exceeded on the upside. Oh, and by the way, I'm using AMC because I saw it was the the most commonly traded stock. And if you really care that much about AMC or GameStop, no offense, but you really need to to sign up for our website, to subscribe to our YouTube channel, because there's so much mythology and things that aren't right that people talk about these things. I was a market maker. I oversaw the trading at numerous hedge funds. I don't want to sound like I'm an arrogant, D-bag, but when it comes to this stuff, I know what I'm talking about. I don't know much about other things in my life, like how to deal with my wife, my kids, yada, yada, yada. But that's maybe Stock Market Jobber will start a therapy page. But right now, I just want to help you learn how to make money. All right, so we got above it. Now notice here, it might be hard to see, but the high trade on this particular day in early December was above the Bollinger Band. And guess what? It was a perfect time to sell. We went lower. Again, when we exceed these thresholds, it attracts in traders. If we're overbought, like we were here, okay, sellers are going to come into the market because they're going to expect a reversion to mean. These are momentum traders. They couldn't care less about what stock it is. They don't care if it's AMC, if it's Apple, if it's this, if it's that. They're just looking for things that look like they're going to move. And that's what we do at Stock Market Jobber. we look for stuff that's out of equilibrium. If it's in equilibrium, it's not going to move. If it's out of equilibrium, there's a good chance it does. Being overbought or oversold, it's like you have a rubber band that's just like kind of stretched out, right? So we get above the Bollinger Band, we close back within it, sell signal. We don't get back within it until here. So you probably would have had a little bit of a loss there, but maybe not. Good sell signal there. Depends on what your stop out rules are, and that's, make sure you check out our site because I will be talking about that. But check this out. Perfect time to sell right here. Above the Bollinger Band, back within. Above the Bollinger Band, back within. Above the Bollinger Band, back within. We get below the Bollinger Band, time to buy. We get below the Bollinger Band, time to buy, okay? Now, let me tell you about one of the amazing things about technical analysis. It has a fractal nature. If understood correctly, technical analysis is a view of human psychology, okay? Supply and demand. If we get, it's supply and demand, okay? If we get above the range, the sellers come in. If we get below the range, buyers come in. But it's important to understand that there are various time frames, and we're looking at human psychology, okay? We get overbought, well, people are buying it too aggressively. They're too euphoric. We get oversold, well, people are selling it too aggressively. They get too scared. Now, traders all have different time frames. This is for a time frame of probably like a swing, what we would call a swing trader, someone who's in a position for a few weeks or a few months. Now, let me amaze you. I am going to go to a different time frame. Here is AMC Entertainment, just one day, and today is March 28th of 2023. The same rules apply. Why? Because what we just looked at was the psychology of swing traders. Now we're looking at the psychology of day traders. Check this out. We get above the Bollinger Band, we sell off. We get below it, we go higher. We get above it, we sell off. We get above it, and this is what I mean, wait for the reversion to happen. See, we were above it for each one of these candles is minutes. So this is real quick stuff here. This is day trader stuff. So we get above it for like 6 or 7 minutes, and we come back in. That would have been a good time to sell. Once again, here we're overbought for, I don't know, 5 minutes. We get above it, we come back in, time to sell. Time to sell, time to buy, time to sell. It told us we're going sideways. We got above it, time to sell. This was a really good signal. We get below, time to buy. We get above, time to sell. We get below, time to buy. We get above, time to sell. Again, the reason why Bollinger Bands I think are so effective is because so many of the algorithmic trading programs that are out there are based on statistics. So Bollinger Bands are based on statistics. And once again, statistics tell us that 95% of all data or samples, or in this case trades, should be within 2 standard deviations of the mean. So this is our one day. So you can see that it's the fractal nature. The same, if you want to understand charts, you got to understand that they are graphical illustrations of human psychology and supply and demand. They're not astrology, they're not tea leaves. I mean, for a lot of people they are, because they don't know what the hell they're doing, frankly. And I don't even mean just beginning retail traders. I've seen, people on TV or whatever, people that are in big roles that they don't seem to get the principles. They just look for what they think is a pattern, blah, 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 blah. Understanding charts is about understanding human psychology, okay? When we get overbought, it's because people get too euphoric. When we get oversold, it's because people get too afraid. So here's our one-day chart. Now I am going to amaze you even more. Da-da-da-da. Here we have the 5-year chart. Now we're not looking at days or minutes, we're looking at weeks. Each one of these candles is a week. Okay, this is a 5-year chart going back to 2018. In this week we got above the Bollinger Bands, good time to sell. Here we got, not perfect signal back in there, but we get up here, good time to sell. We go down here, we close within it, a good time to buy. We get below here, good time to buy. Above, good time to sell. Here we get above it, good time to sell. Here we get above it, good time to sell. Here we get above it and we close back within it, good time to sell. Now here, we're right on the border, but like I said, it's best to wait for the reversion. Just because something is overbought or oversold doesn't mean that it can't keep going lower or higher. That's why it's best to wait for the reversion. Accept the fact that you are never going to get the best price. If you're a buyer, you will never get the bottom. I mean, if you do, it's just, you might as well play the lottery because it's just luck. If you're a seller, you're never going to get the high price. If you do, it's just luck. I was an institutional trader for 20 years. I know that. The trading is about making money, okay? It's not about being right or wrong. It's not about being precise. Think about basketball. We have the NCAA tournament going on. The best teams out there, well, they could still win, right? And they miss shots. They're not perfect. Just focus on the size of your brokerage account. That's all that really matters. Don't second guess yourself saying, oh, well, it got to 50 and I bought it at 52. I should have done a better job. This is really counterintuitive too, okay? Now I know I'm going on a little rant here. As a trader, a trader who wants to make money by using their money to make trades, you have to understand that you're never going to be perfect, okay? It's never going to be precise. The only thing that matters is if you're making money or not. Now we get back down here. We get below here. This is a good time to buy. We get above here. It's a good time to sell, so forth and so on. So this is one of the amazing things about charting, which to me, to this day, even though I've been doing this for 25, 30 years, still kind of astonishes me how we see these fractal things. Like right now, we're looking at investors that have a long time frame. The first chart we looked at was investors that have maybe a 1 year time frame. Maybe they're swing traders. They look at charts that on stocks they're into for a couple weeks, couple months. Now we're looking at long term, and the same thing happens. Reversion to the mean. Okay, there are a lot of trading strategies on Wall Street that are based on this concept of reversion to the mean. Okay, so I hope this helps. I would suggest, if my recommendation is, start kind of looking at Bollinger Bands. Don't make decisions based upon them yet. Get comfortable with the nuances and what they are. And I think it's going to be a real way to help you become a profitable trader. I've been using Bollinger Bands for 20, 25 years, and I still think they're great. And as a matter of fact, I think they've gotten even better over that time frame because 25 years ago, there weren't as many computerized algorithms that are based on statistics as there are now. So simple indicator, simple to understand. My advice is just spend some time with them, get used to them, and I think they're going to help you make money. Okay, everyone, thanks a lot. I will see you soon.